We have the Bank of England warning of a long recession. At what point does that pause in rate hikes lead to rate cuts, in your view?
It could happen quite quickly. The Bank of England was one of the first major central banks to raise rates. They started in December last year, whilst everyone was still talking about transitory and Omicron. So when the Bank of England kicked things off in December last year, it gives them the sort of ability to end their rate hiking cycle earlier than most, and also introduce the idea of cuts. So we're looking for May cuts from the Bank of England, that sort of timing. And why? So inflation will still be higher than 2%. I actually think the risk reward is inflation doesn't fall down to 2% as quickly as the market's pricing, but the central banks will react to the situation in credit markets. If you look at the crossover spreads, you look at the ECB systemic risk, whatever you want to look at, the credit stress in the market is roughly around the same levels as the worst moments in the coronavirus panic of March 2020. I suspect the energy prices, 10 times higher than they were on average in Germany, will knock out the business models of many manufacturers. We're going to see credit stress lead to higher defaults, lead to unemployment rising. And that's why in Q4 and Q1, the story will change for central banks. Even though we'll have high inflation, there could be a dovish moment.
Jordan, South Sterling, still the trade for you?
Indeed. I think we've had a big move higher up to the 122 level. Not very fun for me holding a short for about that period, but the trend is lower in sterling. It has the same problems as Europe when it comes to this energy crisis. Its central bank has just done 50 basis points. Look back to the ECB meeting. They did 50 basis points. What did the euro do? Nothing. So just because central banks are doing these big rate hikes, it's not enough to defend their currency against what's a big terms of trade shock. The pound should essentially be trading towards 115 down to 110, just based on terms of trade alone. The price of the UK's exports have fallen, whilst the price of UK's imports have skyrocketed. The UK needs a weaker currency to help its exchange rate.